So now I'm going to briefly explain the different continuations, of course. Again, I don't want to necessarily repeat myself too much, but repetition is key, and it's very important to understand the reversals and the continuations. So when it comes to the continuations, again, we have an uptrend where price keeps on rising, so to say. And we also got a downtrend where price keeps on falling to lower prices. That in the essence are the two key trends. However, I'm going to introduce you to two different price action terms. And again, this is actually part of the next module, the core concepts of price action. However, it's very easy to understand. So if I just draw a couple of horizontal lines, these white horizontal lines, then hopefully you also understand that obviously a previous ceiling, it gets broken through and the ceiling becomes a new bottom where price eventually finds support, and then it tends to rise and go up to higher prices. However, in price action terms, these are the two new terms that I'm going to introduce you to. Might sound very difficult. It's actually just a synonym, a very similar term in terms of support and resistance. So we got a so-called level to gain, which is equal to a so-called resistance. But eventually, you do need to understand that when price obviously breaks through a so-called level to gain, where price needs to get above, a level to gain eventually becomes a so-called level to hold. So we got two different terms. A level to gain is a resistance level, and a level to hold is a so-called support level. So level to gain, eventually price gets above, it gains the level, and then a level to gain becomes here, if I may change this term as well, a level to hold, okay? Which is equivalent to a support level. So this is pretty much, these are two terms that you will hear more often from now on. And this obviously is very, very important to apply. So obviously if we are going to invert the scale, then it's pretty much the same. Something that was a previous bottom, we do get some form of reaction, but then again, unfortunately, the pump or the price increase, it can't maintain and sustain the price increase, of course, and then eventually we are breaking through levels, and a so-called level to hold, which was initially functioning as a support level, unfortunately becomes a so-called level to gain. So in this phase, it's a level to hold, but eventually, if we break through it and we retest this, it becomes a so-called level to gain resistance. Because again, you need to understand, and that's also something that's very beautiful. We have different trends, but also different patterns. This is a downtrend, of course. But what do we need to do in order to change the price trend? Even though I have already given you multiple examples, but in this case, let's say this is a potential previous low. Yeah, this is number one, previous low. Hopefully now the puzzle pieces are starting to click. This is swing high. Pardon me, this is a swing high, because from this point onwards, price creates a so-called lower low. And that's something that I just explained as well. When we have the first three key points of a so-called potential reversal, you need to be very aware and alert, okay? What do we need to do in order to break the downtrend, okay? We need to get above the so-called level to gain, which functions as a resistance level. And then eventually, whenever you have gained this particular level, which is number 4, of course, because we are breaking through the so-called level to gain or the resistance level, obviously, whenever we are getting the retracement, we would be very interested in taking a trade, because then that pretty much tells us, even though it's a probability and we are never working with guarantees, we can make the assumption that after creating the lower low and also having the confirmation of the gain, then we are very interested in taking a potential trade, because this, with the previous aspects, the previous components, this allows us to make a well-informed decision, and we can make an educated guess that price from this point potentially reverses from trend, and then you go from a downtrend to an uptrend. So if we are going to apply the theory into practicality, there are actually a couple of very important or very good examples. So this is actually a very beautiful example. And if we are going to follow the price action in chronological order, again, you can clearly and visibly see that obviously price was in a downtrend. So from this point A to point B, price was just going down, down, and down. Why? Because we weren't getting above specific levels. So eventually price is just falling to lower prices. But then again, as you can see, where price found some form of support, because you can see obviously the difference between the red candlestick and the green candlestick. Unfortunately, as price does not get above the so-called resistance level, we keep on falling to lower prices. However, at a certain stage, what do we want to see? We want to get above particular levels. And obviously this was a very important level, but then this is what we call a move to the low, a swing high. This is a level. Move to the low is actually also a price action term that is pretty much a synonym for the swing high, but this is also something that I will explain later. This made price a lower low. So whenever we get a confirmation of a gain of a level, we are breaking through the so-called downtrend, and then eventually every single resistance level becomes a potential support level. So as you can see, we are gaining, we are getting above a level, we are retesting it, we are getting a small pullback, and every single time we are getting above levels, we get a small pullback and we go up. We are creating a level, a resistance level, we are getting a small pullback, and then eventually we go up. As you can see here, again, this is a so-called resistance level, because you can clearly see if you follow these red candlesticks, whether it's this part or this part, we do see a form of rejection, because every single time when we hit this particular zone, so in this case it's 91,900, price tends to go lower. But eventually this level gets broken through. So then the next time, whenever price comes back and has a small pullback to this particular level or zone, the so-called level to gain, then this eventually becomes a level to hold. It becomes from a ceiling, it becomes a bottom or a potential new bottom or a support. So what happens? As you can see, beautiful, beautiful, beautiful. We gain the level, we get above resistance levels, then we have a small pullback, and then from this small pullback we can pretty much anticipate price going up. And then at some point, obviously, the trend starts to shift again, because you're losing levels. So then at a certain stage, as you can see here as well, we are creating very important levels. We are creating very important levels, okay? So initially this was something, and this is also something that I will elaborate on later in the course of the next chapter, the module of course. It was a very important level. As you can see, there was a lot of price interaction with this zone, let's say 93K, I'm just rounding it up to a little bit higher, because initially we found support, okay, price, every single time when it was hitting this particular zone, we go up, but then unfortunately we break through this level, we retest this, so a previous level to hold or a support level in this phase of the market, when we break through it and we retest it, you go lower. So that indicates that price is going lower from this particular point. Again, this was a form of support. We break through it, we don't even touch the level, so to say, and we just dump. We break through it, a previous support or a previous bottom becomes a ceiling. We create somewhat support, becomes a ceiling. And that's how you keep on going. Look how perfect, look how beautiful it is. We break through this support. This is where we touched the level, but we rejected. And then eventually that led to lower prices. So hopefully by identifying and understanding the difference between the uptrend, the downtrend, and the reversals, that's how you can pretty much, you can really anticipate on specific moves. And again, what makes price go up? Because we were previously in a so-called downtrend, because again, if we zoom out, very simple, maybe I'm just yapping a little bit too much right now. We were in a downtrend, okay? But then again, what indicates a potential price trend change? Whenever we are getting above a so-called swing high. Because from this point onwards, from this point to this point, we are creating a so-called lower low, as you can see. And then whenever we gain, okay, we get above particular levels, then as you can see, the price goes from a so-called downtrend to an uptrend. And this is just pretty much rinse and repeat every single time. Very important, guys. Reversals and continuations.